China buys when the dollar is strong as a hedge against its currency, while Western central banks step in when the dollar weakens. That dynamic is restoring how the world views gold, not just as a trade. Yeah, it's not just a trade, but as a strategic reserve asset. And I would say central banks don't care about the price, even though they're probably quite happy. We've seen a bit of a correction in the last few days. It's always better to buy something cheaper. Wednesday, October 22nd, 2025, Maneco 64, home of alternative economics and contrarian views. Well, we're going to look at gold and silver this morning. Also at inflation, the UK data have come out. So I think turbulence in the gold and silver price will become even more extreme because the fundamentals are becoming even more pronounced. Yes, and by the fundamentals, I mean the debt is continuing to grow. Inflation is going to persist. Yes, they're going to tell us inflation's under control, but that's all hogwash in my opinion, and probably in your opinion as well, because you know how the cost of living keeps rising. Maybe iPads and other things like that are going down in price, but not your basic necessities of surviving everyday life, right? So I'm going to also reference today a former bullion banker who's retired now, and he has a really good explanation of what's been going on in the last few days in gold and silver, the volatility, the sharp drop in particular yesterday in both gold and silver. And yes, I've said many times before, and I even have a playlist, and I've been saying it for many years because I'm used to these sharp moves out of the blue in gold and silver. And yeah, I've been experiencing them since '02, since I first bought some gold and silver and I started following the market really closely. And I used to get really frustrated and angry. I've built what you can call some immunity to this kind of stuff. It's still quite, well, it's quite interesting to see this big move. And that's why I keep telling people you need to keep an even keel, of course, whether gold goes up very sharply or comes down very sharply. And yeah, so let's start with the inflation. And by inflation, I mean what the mainstream and everyone else considers CPI, which is not really right. If you've been following me, inflation, of course, is the creation of currency and credit out of thin air that leads to, yeah, the debasement of the currency. And the less the currency is worth, the higher prices will be. So to say that CPI and other measures of prices that they are inflation is erroneous, but we'll stick to it because, yeah, as long as I specify to you first that it isn't, right? But to the rest of the world it is. So we had today UK inflation data. FT is reporting, and these data come out really early. They come out at 7 a.m. It's 7:27 a.m. London time as I speak. And that's another thing as well. Prior to COVID, all the UK economic data used to come out at 9:30. But for some reason during COVID, they changed it to 7. And the reason why I think they did is because the markets, the bond markets, the gilt market still closed at 7 o'clock. And they don't want the market to react too negatively to these data. So that's another form of manipulation as well. The data come out when the markets are shut, and the markets can't react right away. Anyway, FT reports UK inflation unexpectedly holds steady at 3.8 in September. Figure comes as Bank of England weighs when next to cut interest rates. You can bet, they'll probably cut on November 6th. That's their next MPC, Monetary Policy Committee meeting. And I think the government needs a rate cut. The chancellor needs a rate cut, right? Because the economy is in the doldrums. The fiscal situation is getting worse. The debt's not getting better. So a little bit on inflation or CPI. I spoke about this back in the summer of 2022. I used to, and I still do sometimes, look at the Bank of England inflation calculator. It goes back hundreds of years, a lot of data there. And one day in the summer of 2022, I went back to it and I was looking at inflation. And I was looking from 1997 to 2020. Why 1997? Well, that's when the Bank of England was given independence and told to keep inflation or CPI at 2%. And I wanted to check that again. And because, I wanted to update it. And all of a sudden, I did that period, and it said 1.9. It averaged from 1997 to 2020. And prior to me looking at that, the last time I looked at it, it was at like 2.7 or 2.8. So I thought, what's going on here? It's like almost a 1% less a year on average. And conveniently, just below that 2% target, right? So what happened? Well, the Office of National Statistics changed the whole methodology for the CPI and basically lopped off at least 1%, going back to the post-World War II period. Even that, they changed the history of rising prices or inflation. So what I'm trying to say here is that this 3.8 is more like 4.8, probably even 5. And if you do a simple calculation here, if you take 72 and you divide it by 5, you get 14.4. So that's the rule of 72. You take the rate divided by 72, and it tells you in how many years something will double. In this case, it's the CPI that will double, but your currency will have, right? So this is what's going on, people. They are stealthily debasing your currency. They're stealing from you through inflation, through issuing more currency and credit out of thin air. It's not going to stop. And the Bank of England rate is only at 4%. And that's why the general public as well, that's why the cost of living keeps rising. And the bottom 50 and even, let's say, 90% is suffering because they never adjust the wages enough to keep up with inflation. And that's the whole problem. So, yes, with that, let's go into gold and silver because there's been a lot of scaremongering the last few days because gold and silver have corrected, and which is normal. As I said, the higher we go, the more turbulent it's going to get. And that's why a bull market is called the bull market because, yes, it gets really turbulent, it gets really choppy, and if you don't hold on to the bull, you fall off, i.e. you get out of that market, you get rid of your gold and silver. And by that, I don't mean trading gold and silver. I mean your insurance against this currency debasement, which is holding the physical stuff, right? And in the UK, I recommend coins of the realm, gold and silver, because there's no capital gains tax. But yeah, there's been a lot of scaremongering how gold is useless and everything, and I'm not going to name names. I'm going to ignore all the hate and stuff and just focus on the truth about gold. There's an old saying that, and I forgot the person's name, but gold is the currency of kings, silver is the currency of gentlemen, and fiat money, or what we have today, is the currency of slaves. So that's what it's all about. I'm not saying gold is an investment, even though it's acting in terms of returns as an investment. No, gold is insurance against inflation and currency debasement, and it will continue to be. It's also insurance versus financial calamity like bank runs, bank failures, and all those kinds of things, and geopolitical mayhem. And I don't think things are getting better. And in the U.S., I just looked at the debt clock. We're fast approaching 38 trillion. Yes, the debt to GDP seems to have come down a little bit from 123 to 120 and a half. But I think that's all based on the AI bubble. The GDP in the second quarter, half of GDP growth was all AI, AI data centers. And I think, there's too much emphasis being put on AI, and the US economy is doing a lot better than all the other ones because there's a massive infusion of capital, especially from the shadow banking sector, like from private credit, private equity, and we know that there's trouble there. I have spoken about it recently. So I'm not saying the stock market is going to collapse, that the AI bubble is going to burst, but that's something to keep in mind. So I don't think the U.S. economy is as healthy as we're told. I think inflation in the U.S. is pretty bad too. It's a little lower than in the U.K., but not that much better. So back to gold and silver. Let's go through what this former bullion banker, Robert Gottlieb, said about what's going on, especially yesterday with gold and silver. And he's got a very long track record since the early 80s in the precious metals. And he worked for Citibank, he worked for HSBC, Bear Stearns, and JP Morgan. He's retired now. So I think he's probably saying things he wouldn't say maybe if he was still working at JP Morgan, even though I can't really vouch for what he thinks. But I think he's given a pretty honest summary of what's going on. So I'll go through it. I follow him on LinkedIn. Maybe I might even get him to do an interview, which is weird, interviewing a bullion banker. Anyway, major correction in precious metals today. That was October 21st. I think it's a date that people will remember. Gold and silver saw a sharp sell-off today, with gold down 5%, silver down 7%. I know I've said it before, but it bears repeating. Nothing moves straight up. The higher prices climb, the larger and more violent the pullbacks tend to be. What possibly triggered the sell-off now? Number one, optimism on U.S.-China trade talks. He says yesterday President Trump mentioned he expects a good outcome with China at the end of the month. When both sides meet, markets interpreted this as a sign of easing tensions and therefore less need for safe haven assets like gold. However, let's not forget China's long-term strategy. It has been steadily accumulating gold reserves and positioning itself as a third global hub for gold trading. Beijing views a strong gold price as a way to support the yuan and bolster monetary credibility. Realistically, U.S.-China trade tensions are unlikely to be resolved anytime soon. I saw President Trump announced that the tariffs are going to be 155% if no deal is done with China prior to November 1st. Second reason Mr. Gottlieb gives, crowded longs and momentum selling. Over the past several weeks, numerous banks and analysts have been advocating for adding gold to portfolios. That narrative, combined with gold's breakout to record highs, has attracted a wave of new speculative longs. Gold has become a momentum trade, and with momentum trade comes fragility. I agree with him. It's become a speculator's game, and that's not what I've been recommending and talking about on this channel. I've been talking about having gold as insurance, physical gold, not leveraging, right? So if you're trading, that's a different story. So, and he continues, when prices faltered, weak longs, CTA trend following funds, commodity trading, their commodity trading funds, like futures funds, and opportunistic hedge funds going short, all rushed for the exits at once, triggering an avalanche of selling. Ironically, one major bank that recently called for a 20% gold allocation also suggested this week that gold might be in the bubble. That was Morgan Stanley, by the way. Let's continue. Context and perspective. That's Mr. Gottlieb. Even after today's drop, gold remains up about 57% and silver up 68% year to date. Still an exceptional rally. Silver's steep decline today reflects the fact that it has outperformed gold this year and lacks the deep-pocketed central bank sponsorship that gold enjoys. In the OTC market, we've seen roughly 24 million ounces of silver shipped out of CME warehouses in the past 2 weeks. Some liquidity is returning to London, but the market still faces a critical shortage, likely needing another 100 to 150 million ounces to normalize conditions. Maybe this is something Mr. Gottlieb probably doesn't agree with me. He thinks this situation is normal in the LBMA. I think it just goes to show how much of a fraudulent market the OTC market is. They don't really trade real gold. They trade paper, and that's why they have this shortage, because they sold too much paper and there's not enough physical. And I think that's a fraud. It's like you being a car salesperson and selling cars that you don't have and making people wait. That is wrong. Anyway, let's continue. Keep in mind, silver has been in structural deficit for 5 consecutive years. Yeah, it's a good idea to sell it short, the silver that you don't have when that's happening, right? Anyway, supported by both industrial demand and its safe haven appeal. Long-term outlook for gold and silver from Mr. Gottlieb. The World Gold Council Central Bank Survey shows that 75% of central banks plan to increase reserves over the next 5 years. Nothing has changed in that fundamental story. Central banks will continue to diversify away from the US dollar and other fiat currencies. This rally is unlike any other. So yeah, it's not a bubble, people. It's the slow, how can I say, controlled demolition of the fiat currency system. That's what it is. And that's why it looks like it's a bubble for gold and silver, but it isn't. The rally, China buys when the dollar is strong as a hedge against its currency, while Western central banks step in when the dollar weakens. That dynamic is restoring how the world views gold, not just as a trade. Yeah, it's not just a trade, but as a strategic reserve asset. And I would say central banks don't care about the price, even though they're probably quite happy. We've seen a bit of a correction in the last few days. It's always better to buy something cheaper, but I think if they're looking to buy on this dip, they got to do it quickly, because we're going to look at where the markets are this morning and at a few things as well. We just have to wait for the dust to settle, that's what he says, and clear out the weak longs for this rally to continue. So there you go, weak longs. And these are not people buying gold coins, bars, or silver. They're just speculators, CTAs, hedge funds, right? So it's 7:45 a.m. London time. So right now, spot gold is 4,152. Yeah. And in yesterday, I think when I spoke, it was above 4,300. But overnight, it's been as low as 4,003. So we're up about $150 from the lows. That's how quickly this thing is moving. Silver, of course, got clobbered 7% yesterday, but now it's up another 1% or 56 cents at 49.23. The stock market is a little higher here. The Dow futures is up 0.2. So is the S&P and the NASDAQ 100. The pound is down a little bit, about 0.25%. And I suspect that's because of the unexpected good numbers for inflation, right? And instead of being 4%, it came out at 3.8, just like the previous month. Maybe the Bank of England will cut. And that, of course, will weaken the currency. That's why that's happening. And with that, we're going to stop here. And I'm going to wish you all a very good day. Take care. Bye.